Hello guys, this is fairbinaryoptions.com. So let's write on the screen what we have here and where are we. So www.fairbinaryoptions.com, and what we're looking here is actually the Great Britain pound US dollar. It is the Great Britain pound US dollar, a currency pair that as you can see, it is rising now from the lows quite aggressively. However, I don't like this. This spike to the upside, and as a consequence, I would recommend here put options. The thing is that the move from the highs here, from these highs here, from the almost 170 level. So the move from these highs to the downside resembles with a falling wedge, but this falling wedge doesn't seem to be completed. We need a new low, if you want, or we need a move below 167. So it is quite bigger the distance from this moment of time, but these markets usually, in order to form a falling wedge like it is this one here, like this, in order to form a falling wedge, you need to have a five-way structure. The five-way structure needs to have the extended wave, the first wave to be the longest wave, to be the extended wave, and therefore it needs to be somewhere like 61.8% out of it to be the length of the third wave, and therefore the extension to be respected. Now if you take a Fibonacci retracement, if we go exactly from those highs exactly to these lows here, like this, and if we take 61.8 retracement from here to here, like this, and let's change the color for it. Let's make it blue. And then if you clone the measurement and you put it here like this, basically the third wave that follows should be smaller than 61.8. In this case, and only in this case, the first wave will consider to be extended. Now, in our scenario here, the third wave that follows here, as you can see, it is not extended. However, as you can see, the third wave in a terminal impulsive move, the third wave needs to be a corrective wave, so all the third wave. But this move here ends with a contracting triangle, and this contracting triangle and this contracting triangle here, like this, means or shows us that the whole move actually ended here, when this triangle ended here. And in this case we have a perfectly viable third wave scenario there with a first wave extension. So how should be labeled this one then? Then it should be labeled like this to be the first wave, like this, then the move to the downside, or the move to the upside, sorry, to be a second wave, then to look for a third wave all the way to the downside that ends with this triangle here. Then it means that the 1 to 3 trend line would not be this trend line from here, but would be a trend line that goes from here to here, 1 to 3. Then the fourth wave should be this one here, so then the fourth wave will be this one here, and then what would be the fifth wave? Well, is it possible for the fifth wave to be the move to the downside? Yes. What we do know is that the fifth wave needs to be definitely shorter than this move here. Usually it relates with 38.2 when compared with this move. So if you go and take 38.2 now when compared with this move here, like this and like this, and you take 38.2 out of it, let's take 38.2, you are seeing that almost the same. Now, like mentioned at the beginning of the recording, what I'm trying to actually do here is to buy put options, and the logical question will be why. Well, I don't think, first of all, that the fourth wave is done here. I don't think that the fourth wave is done here. Most likely the fourth wave will be done either here or with a move here. I mean, not the fourth wave, sorry, the fifth wave to follow. I don't think that is going to be done here, and this to be the fourth wave like this, and then for the fifth wave to have something like A and the B and the C wave to come like this, and that would be our, let's say, place to go and buy call options. But until then, we need a new low. We need the 1 to 3 trend line seriously to be broken here for quite, like we said, for the 38.2. So to come, price to come between something like 66-70 area, so around this level would be a logical place to look for a new bounce. Then another thing is possible as well. It might be that our move here, so this to be a three-way structure, wave A and the B wave and the C wave, it might be that the fourth wave actually is not even completed, and then we should look for the fifth. All in all, what I'm trying to say is that I would like to buy put options here for the Great Britain pound US dollar, and I will buy the put options with end of day. I would like to try expiration date for today, considering that the market will try to push towards lower values for the day. Other than that, if you go and look at the fundamentals to come at the ECB and Bank of England, and with the non-farm payrolls in the United States, I would say the chances are, even for end of week, for market to move lower. But nevertheless, let's stick with end of day, and let's see if it turns out to be a profitable option or not. So let's write on the screen that I am buying put options with end of day expiration date for the Great Britain pound US dollar on the scenario that the market is going to reverse or to attack a fifth wave structure to the downside, which is not completed. So either the fourth is not done with A, B, C, or the fifth not even started. So I would say that the fifth will still come. Thank you very much for being here. This is fairbinaryoptions.com, and all this analysis and recommendations are possible due to the help of our sponsor here, Lion Eye. Bye bye.